What's going on, everyone? This is Andrew O'Connell with Pristine Capital, coming at you with yet another market recap video. It is March 3rd, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to talk about the price action in the indices. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and we'll wrap up with some options order flow. But before we jump in, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trade plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump in here. Another really challenging day for the market bulls. You can see this is our S&P 500. We ended up closing below value today. So we had our S&P 500 close down 1.32%. We had our IWM small caps finish down 1.08%. We had the Qs finish down 2.9%, our big loser for the day. And we had the Dow Jones finish down only 0.38%. So jumping back to the ES futures here, you can see we ended up closing below the monthly value area today. So we auctioned all the way up to this point of control, and there was definitely a bit of a rope-a-dope for market bulls today. And we ended up closing below. So you can see right here, we made a lower or a higher low, which is, not the worst thing. And we closed above this 50-day simple moving average. So I can see here in the futures trading, we are already down about 1/3%. So we'll have to see how we open up tomorrow. The futures are very tough to get a gauge for what's actually going to happen because, yesterday we actually had, some real strength in the overnight market. So yesterday, if we look at this candle, in the overnight market, we auctioned all the way up to this value area high right here, around 38.90. And then in the pre-market, we pretty much faded down to this point of control. We struggled here for most of the day, and then the sellers took control and auctioned us lower to end the day. One thing that I find pretty interesting, if we just jump back to this daily chart, is throughout this entire bull run, you can see we closed below this monthly value area. Throughout the entire bull run here since the coronavirus bottom, we have never been able to trend below the monthly value area. So what I mean by that is, let me pull back here. So these are the prior value areas. And if you look, it's like we had the coronavirus bottom right here. And we had, this was a big correction. We made it all the way down. We jumped right through the bottom of value, but then you can see we ended up ripping higher. Same thing for this next correction. We went all the way down to the bottom of this monthly value area and ripped higher again. Now you can see we're getting another corrective sequence after a really nice long bull run. And now we just traded down to the bottom of value. So if the pattern continues, I'm not saying it will, we would maybe have one or two more shakeout days before jumping back into this monthly value area. But now we are in a different environment where we're facing, it's kind of funny, we're facing a reopening economy, which is good for, for people getting jobs back, good for economic conditions. But in this case, it has been like a little bit of a, sore spot for the markets, just because with a reopened economy comes higher rates and comes rotation out of some of these really popular sectors that did so well during the pandemic. So speaking of that rotation, this definitely was a tale of two markets today, because you can see here, we had some sectors that finished green for the day. So we had energy up on the day, regional banks up, financials, European financials, global autos were up as well. But then a lot of these high growth areas really got crushed. So all the ARK funds were crushed. You can see this one, ARKK. I took a position in this one towards the close, down 6.29%. You can see ARKW down big. Even just this software ETF down over 4%. So this really was like everyone puking up growth stocks and, just further jumping into value. Even when we look at these style factors, this is definitely pretty unusual for a day that seemed like, huge bloodbath, where we had high beta stocks finish up 0.78%. We had international value finish up 0.61%. And we had the high div, low vol finish up as well. But you can see this momentum style factor got annihilated, down 4.02%. So in my opinion, this definitely does look like it's a little bit oversold, at least these momentum stocks. Coming into today's session, we had our pre-market webinar with Pristine Capital members. And I brought up, hey, these growth stocks, they could have further to go on this corrective sequence. One name that I brought up specifically was Chewy. Saying this one could be a good short idea here. And, the thing with stocks like Chewy and some of these other recovery names, this stock is up like 240% over the past year. So even though it's like, oh my gosh, Chewy was at 120, this is such a steal at 100. A lot of these names, especially these big institutions, are taking profits and moving into other areas of the market. They can continue to see downside. So that is definitely what we saw today, where names like Chewy and really many others, just got annihilated, down 7.37%. Coming into today's session, I still had a couple growth names on the books, but I was more so oriented in the value names and some of these growth names that have been holding up really well. So luckily I wasn't in anything like Chewy, but still a tough day nonetheless. Yeah, for these growth names, what I started to do throughout the day was kind of fade some of these value names. So like what I'm looking at specifically is like some of these value names, like I'll pull it up over here. So coming into today's session, I was like, yeah, these growth names, they still have more to go, whatever. Pretty much once the carnage ensued today, that's where I started to be a little bit more opportunistic, fade some of the value, and add a little bit back selectively to some of the growth areas. So like, for instance, if we look at stocks like Live Nation, this stock... Yeah, they operate as a live entertainment company. Yeah, they do concerts, ticketing, and sponsorship and advertising segments. Yeah, so it's live music. If you look at this name, this is where they were. This is the weekly chart pre-COVID. At about $75 a share at the peak. They're now trading well beyond those coronavirus highs. So I know, like, now everybody's aware of, like, okay, value over growth, economy reopening. At this point, the cat's out of the bag on that, and it's become, I don't want to say it's a consensus trade, like, we still saw that rotation today, but what I look for in these rotations is, like, are there signs of this sort of having at least a local climax? And today definitely felt like that for me. So if we look, one thing I've been watching pretty closely is this is the small cap growth ETF compared to the small cap value. And I brought this up in my weekend video for clients. And I also posted this chart out on Twitter as well over the weekend. But you can see, over the weekend I said, hey, it's not inconceivable to hit this same level that we hit when we first tried to reopen the economy back in June. And you can see now today we hit that level. So this for me, I was like, okay, we just hit my target level. Let me scale out a little bit of the value names just to take some targets. And then see where I can reallocate. This could certainly go much further. Like, who knows? Maybe it goes all the way down to this level at some point. So let's see. We'll pull this one up. So maybe it goes like, who knows? Maybe it goes all the way down there. This 1.78 level. I just don't think it's going to happen in a straight line. And when I was looking at some of these names, like, for instance, Carnival is a trade that I had on the books. On this daily chart, this one's sort of gone parabolic, I guess, in the short term. So I took a target in this one. I took a target in a couple others. Like if you look, you can see how extended it is from the 20-day, with energy as well. You know, you can see the top was sold in energy. So for some of these savvy players in the market, you know, they were getting long energy down here. They were getting long energy in here. And this is more so like an area, in my opinion, to take some targets. Same thing with like XLF. These financials names, you know, definitely getting a little bit extended here. So I know a lot of people are just finding out about this like value rotation, like it's just dawning on them. But this is something like these value names have all made full recoveries already. So when I look at some of these sectors, I'm like, you know what, I want to start scaling out. And then let me look at some of these growth names that are really getting hit. So if we pull up, you know, some of my trades for today, let's take a look. So I took a target. Yeah, I have my TLT diagonal put spreads. That definitely helped out a bit today. Yeah, in the morning I tried to take some targets. So you can see I closed out half of my DraftKings common shares at about $71 a share, 71.68. So DraftKings, yeah, if you take a look at this one, DraftKings, pull up the daily. Yeah, this one ended up, I closed out at 71.68. Yeah, so I closed out pretty close to the highs here. And it ended up closing down 4.13%. So that's what I mean when a stock's pretty extended, you know, it definitely helps to take a target. Just because if you're trying to buy when it's that extended, you know, the odds are just slightly stacked against you. So that's what I mean by like, you know, I wanted to take a target in DraftKings. What else did I do? Yeah, I got stopped out of a couple positions as well. So I got stopped out of Dragonfly. This one I got stopped out for $2.51. Let's see this one. Yeah, so Dragonfly, stopped out of this name. This one ended up, you know, having some more downside, closed around like 236. Let's see what else we had. Yeah, this is also what I mean by getting a little bit more opportunistic. So SRNGU, you know, is one of my favorite SPAC ideas in the market right now. These SPACs are really under pressure. And I definitely get it. There's been a lot of excess in this area. But this is the management team that brought DraftKings public and brought Skills public. So this is definitely a SPAC that I want to be involved in. So I've been piecing into this one over the past couple days. And in my opinion, this was really a gift to pick this one up for $10.37. I added some more shares, I believe like $10.63. But yeah, for a SPAC that's very close to its NAV, you know, this just made a lot of sense to me. I think if I was in one of the SPACs that, you know, it's trading at $15 and it hasn't even announced an acquisition, that's where I think you have a lot of risk. So I added that. Let's see what else we had. Yeah, so I closed out my Carnival Cruises. I bought that one for like $26.75. I closed out for $29. Yeah, and we showed this one, but like it looked like a lot of these were really climaxing. So it's like, am I gonna buy Carnival at $29, or is that where I should sell some? So I ended up, you know, taking those chips off the table. Let's see what else we had. Yeah, I got stopped out of Fast. This was a reopening name that really wasn't showing relative strength. So I was like, you know what, if I'm trying to piece out of these anyway, let me take the one that's the most weak off the books. I ended up getting long some ARC, you know, towards the close at around 3 o'clock. In ARC, what I'm seeing here is like, I know now everyone's saying like, you know, ARC's going to go to zero and the whole thing is like, you know, going to go to dust. But yeah, ARC, you know, granted they do have a lot of these overvalued growth names in there, but I do like their investment strategy. I think they have a great team, and overall they have awesome performance. And I saw like, okay, we're pulling back into a support level. So you can see this level around like 123.5. Yeah, in my opinion, it's a good level to trade against, especially when this one is a little bit oversold like it got today. See, I put that one on via some common shares, set my stop. You know, if it hits my stop, I'll be out of the trade. Well, this is another interesting part. Look how much volume was going off in these ARC shares. Once they, with 2020 hindsight, we can see once they really hit their peak. So that's what happens with a lot of stocks and like really successful funds. There have been people like I've made purchases in ARC. I started buying this one, I would say in September. So I wasn't like super early to ARC, but I was buying it here like on this correction towards the 80s. I bought some on this correction as well in the 80s. I bought some here as well. So this is one that I've accumulated over time. So as much as everyone's saying like, oh, this thing's going to nothing, there's still a lot of investors that have made a lot of money in ARC. But you can see once it hit these ridiculous highs, that's when like, the fund started seeing ridiculous amounts of inflows and people start going crazy with the ARC report every night. But yeah, this one looks like it could get a nice oversold bounce. So let's see what happens with ARC. GoodRX is another name that I chose with some call options here. And this one I bought the 45 strike calls for April. This one has earnings on March 11th. I think this name is a little bit misunderstood because this is also a reopening name. So GoodRx, they do couponing for prescription drugs. As the economy reopens, there are going to be a lot more people going to the doctor for things that they've put off. There will definitely be more prescriptions that are written, for that reason. So this one, like I said, like a lot of these stocks are just getting indiscriminately crushed in this growth sell-off. So this was one I picked up. We'll see if we can get a little run into the earnings there. Let's take a look as well. Yeah, I closed out. I had some Las Vegas Sands calls, and I closed half of those out for a pretty good winner. So this is another thing like LVS. There's definitely going to be that recovery in a lot of these Chinese names. But at this point, the stocks, a lot of them are reflecting a recovery. So I just took a target of this one. I still have half of it on. Maybe if it dips, I'll add it back. Let's take a look. I don't think this one has gotten to the previous all-time highs yet. Yes, this one still has a little ways to go. This one could keep running. We'll have to see, but wanted to just take a target for prudence there. I had some SPY hedges coming into today's session. This one, definitely didn't execute on this one as well as I would have liked to. Closed them out for about like a 15-cent gain. And then the market ended up rolling over, in the afternoon. So yeah, that one, pretty tough on that one, but don't always get the timing perfectly on that. And then let's see, what else did we have? Okay, yeah, and then I ended up taking some IWM calls for $10.17. Just because I think this IWM chart, out of all these indices, this one still is pretty much intact. So if we look at this on the daily, so you can see this one, had a tough close, pretty weak here. But you can see this one is still, hasn't made a lower low, and it's above the 50. It's still trading within the monthly value area. This one, it's in a nice trend. So added some calls on that one. Let's take a quick look at some options order flow here. And I believe we have that. Okay, let me just pull this up. Oh yeah, one other thing I'm looking at. So with these growth names, the reason why I'm, starting to, like I faded some of my value names and I added a couple growth today, is because I'm starting to see things like this. Like this is Simply Wall Street. And they do like a valuation model, stuff like that. I use it as a quick and dirty way to look at the valuations of companies. So something like Caterpillar, 38.5% overvalued. And then I'm looking at Apple. Apple closed at like $122 a share today. So this is, current price $122. this is starting to come into its fair value now that it's getting really sold off. So I do think that, now everyone is like, growth stocks are super risky because they just took a 20% haircut on their growth stocks. At the moment, nobody's saying value stocks are risky, and that's typically the way the market works. For instance, when the ARK funds were trading at its highs, it was like, you can't go wrong buying ARK funds. These things are just the best. And then now that it's 20% lower, oh my gosh, don't buy those ARK funds. They're going to zero. Right now with these value stocks, oh my gosh, like reopening, blah, blah, blah. I honestly think that for a lot of these value names, nobody wants to be a long-term investor in these names. This is really just a trade in the grand scheme of things. So it's one of those things where, like, do you really want to be in like Live Nation when it's like, trading on the highs and there's not even any of these live events right now? So let's see. Yes, this one's like 38.6% overvalued. So really not that big of a deal. But yeah, I'm noticing things like Google. Yeah, this one's taking a nice haircut. And this one, the fair value, according to this model, is $29.50. So, the market, it's like a pendulum. The growth names got super expensive, while the value names, nobody was really paying attention. Over the past couple of weeks, the scales shifted a bit, where the value names have gotten more expensive and the growth names have gotten cheaper. So as this continues to happen, I think there will be more opportunities, to unearth within these growth stocks. So that's what I started doing today. Let's take a quick look here. And we'll pull up this options order flow. So I think what will end up happening is right as these growth names, get to good buy points, that will be when everyone is telling you, like, don't buy the growth names. Same thing with the value stocks. Like, I'm still playing a lot of the value stocks and still want to trade those. But I think once everyone starts saying, like, oh yeah, you can't go wrong with value, that'll be when you want to start, taking your targets and getting out of those. So if we look at this options order flow, you can see we had a lot of put flow in the beginning of the day. And that's one of the reasons why I ended up taking my hedge off, because I was like, okay, we got some capitulatory put flow. But then you can see towards the end of the day, that's when the calls, really started coming in. And everyone started trying to buy the dip. So this name TJX, I rarely see this one come up. So I think it's worth going through this one. This one had a really bloody day, but for whatever reason, people are coming after this one. Yes, this one doesn't really look like something I'm going to be interested in. We'll have to see. Maybe it gets some sort of bounce in the near future. We had some Qs, call buyers coming in towards the close. DraftKings call buyers coming in right after it had its dip today. Then, yeah, you can see Tesla put buyers coming in, Amazon, and then a lot of hedges, in the morning. That about does it for this market recap video. Hope you all had a great trading day, and I will see you all tomorrow.